Good day, everybody. Here we are in the latest episode of the ASX Small Cap Wrap. I am here with Danielle Ecuyer from FN Arena. I am really excited to have this chat with you. Thank you so much for joining us.
My pleasure. Thank you for asking me, Claude.
Well, before we get straight into it, I have to do our traditional quick run through the AFSL details, which we will have on screen as well for the YouTube version. The quick version of it is this chat is not intended to form the basis of any investment decision, and it's not a recommendation. Any statements that are advice under the law are general advice only, and we've not considered your investment objectives or personal situation. And any advice under the law is authorised by myself, AR 1297632 of AFSL 343937, and all those details will be in the show notes as well. So, with that out of the way, Danny, I was wondering, maybe you could just, to start us off, give us a little bit of a history of your investing, and maybe you could sort of take us back to the kind of investing you've written about in your excellent books, Sharepelicity and Sharepelicity 2, which are just humongous gifts for someone who wants to go from just starting out to really knowing quite a lot. But there's a sort of style of investing that comes through in that. And I guess I'd be interested to know how you define your current approach. And then
Mhm.
also if you could give us a little bit of the background of the journey of how you got there.
Okay. Well, Claude, thank you so much for the huge wrap. Unfortunately, they're a little bit older now, but hopefully they're still doing what they were designed to do. Really briefly, I trained as an equities research analyst many, many moons ago. So I trained in the traditional sense of probably um, valuing companies in a way that probably is more historic now in terms of what people would call a value investor. So purely low PEs. It was in the late 1980s. But then I moved to emerging market equities, which completely changed my paradigm of how I looked at stocks. Because in many ways, emerging market equities have the same secular trends as some of the themes that have been playing out post GFC across the likes of technology stocks. So my investing experience has gone from being basically my whole career, both here in Sydney and in London predominantly, to basically becoming an investor myself, and how I have transitioned over that phase of trying to build my wealth over time. And it's so funny, Claude, because I have completely done a huge 180-degree turn over pretty much since around 2016, from being your traditional value investor and quote unquote looking for value. I still look for value, but I look for it in companies that have probably are less cyclical in nature and are riding some of these big secular trends that have been in place. And I know you want to touch on some of those themes or the concept of it later. But what has really changed is markets have changed so structurally, and I think people still have a real problem in understanding how can you actually buy a company which is seemingly expensive on a traditional price to earnings multiple, and yet the stock will just keep on going up and up and up. And very simply, it's because those companies are growing earnings. So that's the key thing. It's always about whether your company is able to grow revenues, grow earnings, and ideally get margin accretion along the way. And of course, how they do that and what sectors they're exposed to, or whether they're more cyclical in nature, or whether or not they're slightly different in terms of being a disruptive company, that really then creates some shade towards how investors look at it.
Awesome. Well, there's a lot there to unpack. So I guess
Sorry.
no, that's perfect. I expected something like that. I mean, in terms of an entire career, of course, there's a lot to unpack. And I really do want to zoom in on this idea of secular megatrends, because that's definitely something that I has always been a huge part of my investing. But before that, let's just zoom out a little bit and discuss this concept of value, because I guess it's not something that I always go into the way people think about valuation. What is an undervalued stock? And I guess the concept that what you said makes me think of is this idea of different sources of undervaluation. So I guess in the traditional value investing sense, you might say, oh, this company has a low PE ratio because it's in a dirty business and people don't like it and it's not cool. It's like tobacco or it's gambling or whatever it is, and it has a low PE ratio, and that's your source of like undervaluation. Well, in the case of tobacco, they probably still grow, but some of them might not grow that much, these businesses, but they don't need to grow much either because expectations are very low. And I guess that's what everybody, when they talk about value investing, people are kind of just often using it as shorthand for that kind of investing. But I think what you're saying is actually, whilst we're happy to, in a colloquial sense, seed that tag of value investing to people that want stocks with low expectations, actually, just because you're investing more in stocks with higher expectations does not mean you're not a value investor. In fact, well, this is my theory anyway. You tell me what you think of it. So I think sometimes the reasons that these companies that have a high PE ratio and high expectations are nonetheless still undervalued, beg your pardon, is because I just notice it all the time in markets, and also particularly analyst estimates. The human brain tends to love this idea of just extrapolation in a linear sense. So,
Yeah.
if it's growing at 10% now, then
Yeah.
it's going to be like 10% and 10%, maybe it'll go down to 9% or up to 11%, but it's pretty much growing at 10%. And that's what people tend to model. And that's how people think of it. But what you alluded to in your answer then is the margin stuff that comes in. There are certain kinds of businesses that are much more common now in the last decade than they were 3 decades ago or 2 decades ago, which is where operating leverage really kicks in quite hard and it continues to work for quite a long time. So, and in those situations, what you have is a situation where, first of all, at an inflection point, which is also something we're going to talk about in the company I'm most excited to talk about today, is it's kind of at an inflection point in terms of, I think it's cash flow. But once you have profitability, and then if that revenue growth maintains at a good rate, the profit growth can be even better. And
Correct.
so I say one of the sources of undervaluation can be that, yeah, the expectations might be high, but people in their linear mind of seeing something grow, they struggle to imagine just how fast something might grow for at least a few years. And therefore, you can have this, sometimes a stock with high expectations can have this source of undervaluation, which
Correct.
is that people can't even believe it's as good as it
Correct.
actually is.
There's some really interesting work, because I listen to a lot of American interviews and stuff, because there are some really interesting people out there who challenge the natural way that sometimes Australian investors think. They've also been around for quite a long while. They do have a tech slant, but just to make a point that margins in the US have been going up, as you said, dramatically for these big US companies over the last 2 decades. So the margins of the 1990s are very different to the margins of what they are now. So the point of that, putting it really specifically, if you grow your top line at 10%, but you're expanding your margins, the drop through to the bottom line means your earnings are possibly growing at 15% plus. Now, what that means is you might be ascribed a valuation of 10% growth for the revenue, because everybody assumes, as you said, it's just going to be 10% at the bottom. But you get this extra kicker, and that extra kicker is often exhibited in terms of the valuation being re-rated on the stock. And that's something that people really do not understand. And I guess it's also really evident, let's say, in resource stocks, right? They've got huge operating leverage. They've got all these fixed costs or whatever. When the prices are bombed out, there was always a saying when back in the old day that you'd buy a resource stock when it was on a massive multiple. The reason why you do that is because they're not making any money, because the price of the commodities they're digging up or whatever is really, really low. But because they've already got all the sunk costs in terms of what they've put in there, as soon as the price rises, you get this massive operating leverage, assuming all things remain equal and their costs don't go up, yada, yada. And ironically, you sell that type of stock when the multiple really gets compressed, because they're operating at peak operating efficiency. The difference, though, between a resource company and, let's say, a technology company, which we'll touch on later, is that they're not operating per se in a typical economic cycle. They're transcending that. And again, that's something that people can't get their heads around. If you've been classically trained that you only buy it at 10 times PE, you just can't get your head around how you can make money that's on something that's more expensive. And I think it's particularly pertinent at the moment with what's going on with AI, Claude. And there's a huge debate. I'm clearly on the side that people don't understand the magnitude of the change that's actually going on with AI. And just really quickly, one of them is whether or not you're using as a source, which we do here at FN Arena, and you may do as well. It's not to do our work for us, but it assists our work. It's a very professional assistant. So by definition, our productivity is going up. And that is something that even if we're not going to be replaced, because clearly, it's not ideal if people just start using to create reports from ChatGPT and stuff. As we know, we saw with Deloitte's, there's lots of hallucinations and they get it wrong. But it doesn't obviate the technology making a huge difference in terms of increasing productivity before it becomes more intelligent down the track. Those productivity increases are going to make a massive difference to businesses. And I think that, again, is something that is not well understood. It's not appreciated. There was a great example this week. Commonwealth Bank is the largest bank in the world to have moved everything onto an AWS cloud. They specifically stated they are doing that because they are going to start to use their data pools, which are managed by a company called Snowflake. All that data is valuable. Data can be used to make a business more productive. It can be used to get products to market more quickly. It can
and be a competitive advantage, because often one person
correct.
has the data and the other person doesn't.
Correct. And then they're going to, because once you're in that cloud-like structure, which of course raises lots of questions about cybersecurity and all those things. But let's face it, you can hack a server in a building, you can hack a server in the cloud. But the point is then when they're in that situation, mobilizing their data pools, which is another big aspect of this, then the AI overlay will come into it. And before people go, well, that's all a pipe dream. It's not. JP Morgan has taken ChatGPT as a wrapper and they are using it across the whole of JP Morgan. And I've confirmed that for a fact because my son works at JP Morgan in London and he's like, oh, duh, Mum, of course we're using it. In a simplistic sense, like it does basic Excel spreadsheets and it does basic PowerPoint. But why I'm banging on about this, because I think it's really important for people to understand that we have had this transition in economies where companies are more efficient. They've got more levers to pull. We're seeing it with ResMed as well, Claude, with their margins. And this is a key differentiator that allows for a higher valuation on a stock because they generate above and beyond profit growth, but it also allows for either a re-rating of a stock or a de-rating of the stock.
The one thing I'd add to that is I think it's just still early days in companies actually getting to use these technologies to increase their
Correct.
profits.
Correct.
I think that
Correct.
where we are right now is that a lot of people, like I'm not talking about companies, obviously they're completely wise. Like a management level of a company, a CEO totally understands that if someone just uses ChatGPT to make a product and then presents it out, it's going to have mistakes in it. Not all employees necessarily twig that like they can't just do something on ChatGPT and publish slot. Like I think another thing we are seeing a lot is like quite low quality content that is created by ChatGPT, not by big companies necessarily, although there are occasional examples, but just people haven't worked out how to use it the best
Correct.
way
Correct.
first. And a lot of people just have not figured out that like you're only tricking yourself if you think you can just grab something from an LLM and publish it or submit it to your boss or
Yeah.
whatever it is, because
Correct.
eventually they're going to realize like, dude, like, this isn't just not right. Where's the source kind of thing? So
Yeah.
and so that means there's like, that's friction that's happening at the moment as people are figuring these things out. Fast forward a couple of years, people will have a much better idea of the tasks for which this technology is actually already useful and the task for which
Correct.
is not yet useful.
Yeah.
So Yeah, like that. I think that's still
Like
to come.
coding for interest. Coding is that they're using. Jensen Wong was saying that they're very much in that sphere. It's very good at being able to do coding. So as you say, in the written sphere, it's not as adept as some people might like it to be. Digitally, it's potentially challenging the likes of an Adobe or whatever to create content. So it's scaling at different degrees. But I got a little bit off track, but I think it was really the point of what I was getting to was the whole margin story, which is often not appreciated by investors.
Yeah. Okay. Well, is it okay then if we jump right into Siteminder, which is, and the reason that I sort of wanted to bring that up after you said this margin thing is because I guess part of the story of Siteminder is it's sort of passing that, well, so I think the big headline news with Siteminder and why it's a natural segue is that we're seeing it happen with these most recent results. We're seeing its, first of all, its loss reducing, and then most
Mm-hmm.
importantly, in the second half of FY 2025, we actually saw, a record half year EBITDA. Now, I'm
Mm-hmm.
not going to try and say EBITDA is like, real profit, but it often you're going to see that inflection point in EBITDA profit, whatever
Mm-hmm.
earnings before. I'm sure most people know it, but earnings, before interest, tax, depreciation, and amortization, a very loose proxy for operating cash flow sometimes. But you often see a company inflect over to EBITDA positive before they become net profit after tax profit
Mm.
positive. And in fact, years ago, I asked an experienced mentor investor of mine, what's the kind of things you scan for? And one of the things that they looked for would just be, one half year, like the first half year of EBITDA positive,
Mm.
because that
Mm.
is a point where it could be like an early warning sign that the company's about to become profitable.
Yep.
And I guess that scale thing you're talking about, as a business with operating leverage gains scale, like the first thing that happens if it is loss making is it starts reducing those losses. So I think that, Siteminder, which is a company we've previously covered on our website, we have not yet published our results coverage. You have published an excellent article on Siteminder for FN Arena subscribers. So I was wondering, can you talk us through, like, this is a great topical small cap growth stock on the
Yeah.
ASX. Can you
Yeah.
give us a little bit of a rundown of, I guess, what it does and why it caught your attention?
Yeah, so just to give people some background at FN Arena, we don't do the research per se ourselves like you do, Claude. We very much are a financial journalist that look at all the research produced by the financial institutions, brokers, and other ones, and we basically cover what they are saying. Both in a daily context as well as we write reports. Now, the Siteminder was a case in point because they just had an investor day, which you're probably aware of.
Yeah.
And it's a really interesting company. So lots of people, particularly those who would follow you and invest in small caps, they're always looking for the next technology one or the next WiseTech Global or the next Zero. It's always that thing like, can I jump on board before, the price goes up 20 times or whatever? Suffice to say that some of those stocks probably still have huge growth ahead of them, but nevertheless, it's the whole concept of, you buy small and it gets big. So Siteminder is a case in point where it has grown considerably since when it listed in 2021. And basically, it's a software platform that has been created by these guys for a very disaggregated industry, which is the hotel industry. And it's ripe for disruption and rationalization. So I suppose it's described as either the eco center or the epicenter of software management tools for channel management. So basically is designed to make hotels to be able to manage their bookings more efficiently, be more in tune of how to connect potential customers and get them into their premises. And in doing so, they pay a subscription fee, as you're well aware, for this platform. But the company is also now trying to upsell its services, evolve into working out how they can provide more products to the hotel client that connect them with their customer base and take a slice of that revenue, which is basically trying to change the model a little bit or diversify it from a software as a service platform, which everybody is fully aware with, again, with the likes of WiseTech, Global, Technology One, etc., to taking a clip on the transactions. And so it becomes more whatever,
Yeah,
revenue
that's right.
based
And
in that direction.
I'll actually put an image of this sort of chart up on for the video for the people who are watching this on YouTube. But essentially, I think it's worth noting that for Siteminder, it's a little bit unusual. Generally speaking, when we have companies where we're talking about recurring revenue, actually, I think
Yeah.
is the original thing that I am interested in as an investor, and I know you like as well. The recurring revenue is generally either subscription revenue or transaction revenue. So, for example, most of Pro Medicus's revenue is transactional revenue, and that can be great. And in the case of Siteminder, it's a little bit unusual because it's actually got a split, a mixture of AR of general and subscription revenue, which has been growing very nicely, and then also it's got transaction based revenue. Now, it's an interesting
Isn't the
nuance.
bulk though the ARR still? It's
Yeah,
still the predominant one at this stage. It's trying to transition. That was my understanding.
yeah. So the subscription revenue from I'll put the chart up. But so subscription revenue, I have it as in the second half was around
Yep.
just under 73 million versus transactions revenue of around 47 million. So
Right.
both significant, more in the subscriptions, but don't forget the transactions revenue. It's kind of oftentimes it's like essentially recurring because you don't actually have the volume changing that much. So when they talk about ARR, they are talking about, I can't remember the exact way they do it. They calculate ARR by multiplying the
Mm.
previous month's subscription revenue by 12, and adding 4 times the previous quarter's transaction revenue, assuming any promotional discounts has ended. So is it worth kind of diving into the ARR constituents there? It's kind of like a little bit of a strange mix. It's growing strongly,
Mm.
but it's a strange mix of transaction and subscription revenue. Now, I don't personally think that's a problem in any way, but it is worth understanding because my base case would be that the subscription revenue just pretty much always goes up. But
Hmm.
in a recession or something like that, or in a slowdown, you would probably expect, or if there was something that massively impacted travel, you would expect that transactions revenue to go down. Now, as it
Mm.
happens, because SiteMinder has been growing quite strongly, that transaction revenue has been growing as well. So it all looks
Yeah.
pretty good from a growth perspective there. But it's still just worth noting in case that comes relevant in the future if there's like some travel freeze as
Yeah.
volcanoes or whatever it might be.
Yeah. I guess the thing is it's looking at it in isolation, like let's say the cycle, the economic cycle turns.
Mm,
Yes, there might be things, but ultimately it is the largest operator in the space. That's my understanding. And there's a huge lot of, you know, TAM out there. So they're kind of doing multiple things concurrently, aren't they, Claude? They're trying to pick up more customers on their base to generate the subscription revenue and the transaction revenue, as well as actually trying to increase the transaction revenue with the existing ones. One thing I would say, some companies are easy to visualize in your head, and I didn't get to the investor presentation. I wish I did because they actually put how they call it the flight deck, and this is the software, this is the platform, how it's presented to the hotel, and they talked everyone through it. I did find trying to understand some of the moving parts that are in there. Conceptually, you sort of have to try and break it down, like how the market works, where the hotel sits, where the likes of the online booking agents are, like booking.com, how they connect and what they're trying to do. And I don't know how you find it when you look at it, but I think it's got a little bit of nuance of complexity there in the way that they're doing it.
for sure. Look, I'm going to put it in. I'll say it at the end as well, but I'll put it in right now because it goes exactly to what I'm about to say. Anyone listening to this, sign up to FN Arena, get the free trial so you can read this article. And if you type in promo 25, you get an extra long free trial. Because I've been following this stock, right, for a few years. Because thankfully, I've got a great writer, Growth Gauge, who's been covering this stock for us. So I follow it through him. I feel like I've personally missed it a bit, to be honest, but I can't paddle the fluffy dogs. The the key point that I took out of your article, which I really liked, was just painting this picture of how it's using new modules to
Mm,
expand what they
mm,
do for the
mm,
customers. What really, I guess, piqued my interest in terms of this description of the business, which I feel like I'd lost sight of a little bit, just focusing on the finance, is just this idea that these products, it's the C plus, the channels plus thing that you were
mm,
talking about.
mm.
You said basically City sees channels plus as allowing hotels to bring on board new online travel agent channels without
Yep,
having to sign agreements with each of them.
yep,
And that was a
yeah.
key sentence for me and a key insight, because what that really, that where that really took my mind was, look, for all, initially what happened is when the internet started, all of the online travel agents started, and they were just a massive convenience for everyone. It was like unheard of that people could suddenly just really
Yeah.
easily see all the options, compare the prices. You know, I it's hard for me to even imagine how people did hotels before all that, because I'm just old enough to
I
have been.
know how.
Yeah, yeah,
People,
you got to tell me, but
people,
I'll tell you how I
people
did it.
used to, they contacted a travel agent and they go, tell us, like, you go, I want to go to Rome or I want to go here, go there. Tell us, what are your favorite budget hotels? And of
Yeah,
course,
right.
the hotels spent all their time marketing to these travel agents
Exactly. Who had so much
because
power then?
that's yeah, or the advertising. I knew somebody who owned a hotel down in the south of Italy,
Yeah.
and they had a huge they're near Sorrento, they're still there, and it's a huge customer base from Naples, but they're always trying to grow the overseas, and how challenging it was actually to do it. Where did we advertise in London to get the English? Blah blah blah. So that's the old way. It's called a phone, the dog
Yeah,
and
yeah,
bone.
exactly. So the old way that I used to do, because the only one I'm old enough, is you have your like battered up secondhand copy of South America or Africa on a shoestring, and then you
Yeah.
just go look at the next place, and the little thing where they say, where are you going to say? You open your book and you just choose one and you write it in, and then you just rock up with all of your belongings for the next 3 months, and you're like, have you got a room? And they're like, no. Guess what? Everyone comes here because we're in that one book.
Yeah, but it's a really good example because I find when I'm looking at companies to visualize or put in place the reality of what you're dealing with is really important to understand what they're trying to do. And as you alluded to, this is such a disaggregated, disparate industry. Like there's lots of small hotels of which Siteminder is very exposed to. They've got more hotel rooms, I was reading yesterday on Morningstar, than the likes of Marriott, which is
I
the largest
I just
hotel
wanted to
chain
jump
in
in
the
on that
world.
point as well. I
Mm,
think this is also one of the strengths of their model as well, because
mm,
when you have extremely, just like a few extremely powerful customers, they have more of an ability to negotiate the terms with you. But when you
yeah.
have a lot of customers that are smaller, and you have more power to set your prices basically. And once upon a time, it was the old fashioned travel agents that were so important, and then it was the webjets of this world, and the new online travel agents. Of course, more and more of them started popping up. And while there are some big ones that are still pretty important, people have no hesitation to jump between them. And
Mm,
then I'm wondering if Siteminder could be pulling off like a little bit of a coup in trying to have this situation where they have all of the hotels, and then they choose what online travel agents those hotels are automatically ported to. And that's
yeah,
what a little bit what it sounds like this C
it
plus
does.
thing is
Yeah.
doing. And I wonder if that I think that, if they get critical mass there, that will start allowing them to exercise
Mm.
more pricing power.
Yeah. Well, I guess the thing is, it's you've got customers there, and you've got the accommodation there, and the accommodation wants to be A, fully booked all the time, B, wants to maximize their pricing throughout the cycle. Okay, so when
Mm.
you have a bad economic cycle, you have to discount, but you don't want to overly discount. Then you've got the customers on the other side who are using all those portals, the online travel agents, and SiteMinder is basically using its connection, its data to basically maximize the performance of the hotels through every cycle, through every condition, through what's going on and the constant changing. Can you imagine how many people go online to booking.com or Webjet and they start scrolling, or they go on to Qantas? I was double checking. I'm going to London to see
Yeah,
my
there's so
son, and
many
I
now.
was double checking to see the hotel that I want to stay. Oh, look, I can get, whatever they're worth now, some Qantas points as well. But imagine that hotel, it wants a portal, or the flight deck as they call it at Siteminder, to be helping them to get their tentacles out to get the most efficient, best outcomes for their pricing, whether they're pricing a day in advance, a week in advance, or in my case, 6 months in advance. And I think that's kind of the simplest way to kind of look at it. It's like somebody described it as like the nerve center of this industry. And
Yeah.
it's all ultimately, isn't it? It's always about quicker, faster, will deliver, hopefully, more profitability for all parties involved. And that's the part that Siteminder, it wants to get more people onto its flight deck, onto its platform, using it, but equally they want to maximize the revenue for those customers, because lo and behold, we'll have a little bit of that, thank you, we'll just take the clip on the way through.
Yeah, exactly. And like the other thing is, I guess, just also practically, as these OTAs, Qantas, Booking, this, that, and the other, as they proliferate, no one person can like update all the fly prices or the
No.
inventory.
Yeah.
So they need to have this this kind of some kind of software that does this service is a must have. Yeah, it has a lot of things that I look for in heuristics. You could say like it's pretty mission critical, business to business. You could say that at least some of the customers aren't too, like most of the customers aren't too powerful. You could say that it's mostly recurring revenue. Essentially, even the transaction revenue, you'd probably consider recurring
Yeah.
revenue as a
Yeah.
general rule, just whilst allowing for some
Yeah.
fluctuations. Lots of good heuristics there that I use when I talk about quality stocks,
Yeah.
whatever stage they are in their development. But I was just hoping that we could then now discuss Siteminder as a segue through the lens or the framework of secular megatrends. So
Mm-hmm.
when you say secular megatrends, I'm sure that we have similar definitions, but I'm interested, like, what's your definition of that? And then, like, how does Siteminder score, or how does it fit if you look at it through that framework?
Okay. I heard a great example the other day, and this is from Tom Lee from Fundstrat, because he used to be the wireless analyst at JP Morgan, and he was exposed to the rollout of mobile phones. And he made a really good point. At the time, I think there were like 34 million phones out there. And for those of you that are too young to remember, I can tell you that, having this little iPhone knocking around now, my God, the first mobile phones, you have to watch, what was it, Wall Street, the first movie, to realize people had a brick. Anyway, he was saying older style investors, older investors is like, it's never going to take off. It's never going to work. And I can put my hand up and say, my son, who was 7 years old at the time, picked the iPhone trend more than his stupid mother, who'd been following markets for years. And the reason was he brought new eyes to it. To him, he goes, wow, that's pretty that's pretty amazing,
No, we keep it
right?
in.
That's pretty amazing. And I'm going, oh yeah, whatever, being Miss Smarty Pants. Now there are more mobile phones than there is the global population.
Yeah, wow.
Now, that is a secular trend. Boom, boom. Until NVIDIA, Apple was the largest company in the world. You can't have a clearer secular trend, something easy for people to grab hold of in their minds. Now, Tom Lee was saying back then, to him, it just seemed so obvious this was going to take off. But, and I want to go back to those prejudices that we all bring to our investing experience, how it is really important that you keep an open mind. Missy here, who had a closed mind and thought this technology, it's not going to work. We're still going to have our, phones at home, yada, yada. Well, I kind of missed one of the biggest trends ever. Sure, I probably got on board at Apple at some stage, but that is a big secular trend.
That was such a big one that had like secondary flow-on effects as well, like
Yeah,
in terms of,
apps.
yeah, exactly. So that's a huge one. But taking back to Siteminder, how does it, like, well, I was trying to think about Siteminder when I
Yep.
was thinking about what trends does it benefit from and what trends.
Technology and AI.
Yeah, so
Can
I
you
think
imagine that's basically data analytics. You
yeah,
know,
and
it's a
automation
classic,
essentially.
yeah, it's a classic software disruptor in
Mm.
an industry that's ripe for disruption.
Because
Okay.
in particular, what I was thinking is the functions that it does about taking all this data from various
Yeah.
sources, including the state of, the demand, and also obviously inventory and all the information that the hotel itself has, taking in all that information and using that to suggest pricing is
Mm,
clearly something, what you're automating, what would have taken someone smart quite some time to figure out
correct.
something that was roughly just as accurate or less accurate. So that's like a huge automation. Essentially, software as automation is just this huge trend that continues to play out. And
Mm,
we often do see once a single company or a couple of companies emerge as the main sort of software operating platforms for a certain industry, like they can get extremely embedded. They're powerful,
mm.
and then it's because what they've done is come and conquer green space. It's harder
Yeah.
to displace them because the next iterative improvement, even if someone else does come up with something better, it's not necessarily better enough to justify
Mm.
the move for a customer.
Yeah. Yeah.
So for that reason, you could have this situation where we were talking about the mining companies earlier. Revenue and profit goes up, revenue and profit goes down. The difference is here, well, hypothetically, it should just keep going up for quite a
Correct.
very long time.
Yeah.
If we base it on the fact there's going to be more OTAs. Also, there's also this this mechanism whereby they could potentially have more OTAs as part of their C plus thing and more clients using it, so it
Yeah.
becomes more valuable. You should have some mild network effect stuff
Yeah.
there. On
Yeah.
top of that, I guess the main thing is all hotels are going to need to go to this just to
Yeah.
compete in terms of their distribution. So I like
Yeah.
that as a trend that this benefits from. However, if I would have said maybe 5 years ago now, or 6 years ago,
Mm.
or take us back to 2019 or 2018, and I would have said that another trend would have just been global travel. Like it's becoming a globalized world. It's becoming, people are getting, I guess, richer. So they have more time for travel and stuff like that. However, this is where, and I'm not saying I'm against the idea, but I just want to, I guess, critique it from this aspect. I wonder if that, what was previously perhaps tailwind, might have turned, that trend might have come to an end. And this is my
Mm.
argument. Please feel free to knock it down. But my
Mm.
argument would be this sort of trend of increasing demand for travel
Mm.
may be petering out or coming to an end based on a few factors, which
Mm.
is, first of all, potentially a bit of a less growth in business travel nowadays, because we do have more remote conversations like the one we're having now, whereas
Yeah.
previously you might have had to travel for that. And then secondly, the other thing was, and this is possibly me being like paranoid or overly political or whatever, but I definitely feel like the sort of the travel stuff coming out of the USA seems very anti-foreigner and not that
Yeah.
pro-travel. Like it doesn't seem to encourage a vibe of travel. And I know that's only one
I-
country, but it's a big
Yeah.
country.
I think you're overthinking it, Claude. I really do. I think you're completely overthinking it.
Just
Uh,
overly responding to the sort of current narrative, even though actually the
yeah,
long term trend will stay the same.
like this is still a very small company in the global context. That's the first point. There is still a huge market out there for them. The actual physical size of the travel market could contract, but they can still, if they have a better platform, if they can offer their clients, their customers, an ability to be more efficient, to be faster, to get the bookings, to make more money, that moves beyond the economic cycle, Claude. And I think that's really important to emphasize that the reason why you have those big tech companies, yes, at some point, maybe, PC sales and iPhones are affected by economic activity, but ultimately the trend is still higher adoption. And I think that's why you're overthinking it. And it may be a good point just to mention to people who are watching that at FN Arena, you'll actually get a history of the earnings and the balance sheet using FactSet, where everything's come from. And we also give earnings forecasts, and you can have a look at what growth's expected. And we also do like the price targets and the consensus price targets, which will also give you some context.
And you have
around,
and you have analyst estimates as well, don't you?
yeah, analyst estimates, absolutely.
It's
It's
really
all
it's a top
summarized.
notch. I know many of my subscribers who will be listening to this also subscribe to FN Arena, as it's a top notch
Smart subscribers.
source for all. No, people use it and they tell me, and all the time, like, if so, some people might have access to FactSet or Cap IQ or whatever. Fair enough,
Yeah.
but for people that don't have access to that, it's a no brainer to get just all of this information so handy.
And it's also, it's a little, it goes into more depth. But I think
It does, because it gives
sometimes,
you information about what they said and everything, like
and
way
also,
more than what
yeah,
you get. All you get if you've got S&P Cap IQ is you just get the estimate number and nothing
yeah,
else.
yeah.
Yeah.
But I guess my point is that sometimes we can overthink things.
Oh, I do it all the time. I'm sure you're probably right. In fact, when you said that, I was like, you know what? I want to put up the chart of the ARR, because what you'll see is in the most recent half, they had a good jump. And that's like a big part of why the share price has come up lately. So that's my segue into this other topic I have. So here's my problem with Siteminder. I guess I'm anchored. So we're talking psychology here now, psychological biases as a small cap investor. I started looking at Siteminder ages ago, right?
You missed it.
Yeah, exactly. So I have this
Oh,
this sort of psychological condition now where
no,
I
no,
look
no,
at
no.
Siteminder. Honestly, we've been publishing on it. It kills me, and also our author has been positive on it, and so I look at it like, back in March at 350, and even in the past in 2024 it was around $5 and looking half decent. 2023 it was lower. I admit it hadn't captured my imagination then, but for almost 2 years now, I've been sort of thinking it. It's been on my watch list. I'm like, oh, should I recommend this? Should I buy it? Like, what's the story?
Mhm.
And I've been a little bit paralyzed, perhaps exactly what you said, just overthinking it, inventing too many concerns. Also, I just have a natural bias against companies that aren't yet profitable, so it makes me more
Yeah,
paranoid.
yeah. Well, that's a different issue, though. That's a
Yeah.
completely
But
different
now
issue.
I'm sort of anchored to that $5 price. And the reason that
Mm,
I sort of, I guess, one of my hesitations now is
mm,
once a share price starts going up, it
mm,
makes you feel fear of missing out. And then fear of
mm,
missing out can, not always, but can sometimes make you sort of buy the hype, and you buy it just the wrong time and just for the wrong
yeah,
reasons. You lack
yeah,
the long-term conviction.
yeah.
You're just chasing momentum. And then if you buy
Mm,
the hype, then you can be put in a situation where the share price comes
okay.
down a lot. So the idea I want to explore is, when do we need to worry? How do we manage this risk of buying the hype? What experiences can you share any experiences of where you
Yeah.
personally bought hype? Because then I'm going to share
Oh,
one
gotcha.
afterwards.
Yeah, yeah, yeah.
And
I
then
think,
I
yeah,
guess, how do we think it applies to Siteminder is really the last question.
right. I think the thing is when one buys a really good company, um, and this comes specifically from the editor at FN Arena, Rudy Philippek Van Dyke, who is per se also my husband. But look, if you have a chart that goes from left to right over time, right, left to right, starts at the bottom, goes to the top. If you had bought it, if it started at 0, you bought it at 10 and you go, oh, it's gone up so much, can't buy it. Goes to 20, can't buy it, it's gone up so much. Then it ends up being $100 or $1,000. Every point along that period, you could have bought that stock. Now,
Yeah.
of course, at the time you don't know that.
Mm.
But that's the thing about a good company. You must not, people look all the time, guilty as charged. Where has it come from? What's the market telling us?
Mm.
But while the market might get it right in the long term, it doesn't always get it right in the short term, because as we're seeing at the moment, sentiment is a massive driver. And as you pointed out, to momentum and all of those things. My biggest guilty thing is I'm a great momentum follower, like
Mm.
always have been. So I have to pull myself back, because I feel in times like now, when you're seeing Drone Shield,
Mm.
right? I had lots of friends. They bought Drone Shield.
Yeah,
Look
my
at them.
father-in-law's friends are on Drone Shield as well.
I think everybody that made a fortune on it.
Yeah.
I haven't looked at the numbers, but like it went up 10% the other day because they're investing $13 million in a factory over in WA. And you go, seriously? There is a bubble in drone stocks around the world. It's happening in the US, it's in quantum stocks. That is a case in point
Yeah.
that you just go, like, I go, oh, I'd really like to be there and I'm really angry I wasn't there. But I've learnt, and particularly in the post-COVID period, do you remember what the COVID recovery was like? Like the whole world was ending, we're in shutdowns. And then that April, markets started to move again and they raced and a whole lot of people missed it. I got in again,
Yeah,
but I
I
know
was definitely
towards the end,
slow to change gears in April because I'd like got into cash at the, like gone to a
yeah,
lot of cash at the end of February, so I thought felt pretty smart for a while there, and then of course
you missed,
most of the advantage that I'd gained, I sort of
yeah,
lost by being slow to
yes.
get back in.
Correct, and that is another case in point, and you're not the only one because we had a meeting, not us one-on-one, but there was a presentation from Australia's, Sovereign Future Fund. They did exactly the same thing as
Yeah,
you,
right.
so don't feel
Yeah.
bad. But my point is if you went through the cycle, we ended up in memesville.
Yeah, exactly. It got silly by the end.
Yeah, but the problem is that, like, for example, I made a fortune on Zoom. And I remember talking about thinking this is going to go on forever, even though I actually sold it and made a lot of money.
Yeah.
Possibly that is one. I was definitely on the Tesla bandwagon until Elon Musk turned into the whatever
Yeah.
and bought Twitter. And I'm a bit sad about the company, but obviously there's still true believers there. But again, I made a lot of money on that. I made a
Yeah.
lot of money on Moderna. But in all of those cases in point, I kind of, for whatever reason, was kind of tweaked enough to realize that on top of some great fundamentals there were COVID kickers in there. That's just that example. But also that they get taken away into this, the meme hype completely.
Yeah, the sociology of it gets crazy, and it's just
Yeah,
completely at that point divorced from the value
yeah.
of the company.
And you don't have to, after a company makes a great announcement, it's always hard to say, well, do I buy it now or do I wait? Now, Oracle in the US was a crazy one. It went up 40% or something ridiculous on a statement of intent that
Mm,
OpenAI was going to do this. I mean, me as an investor, no, I'm not touching it. You
mm,
wait till that comes back down again. In the case of Siteminder, I think the other point to make is investors have to decide how they enter a stock.
mm,
And there's nothing wrong. I made a lot of money on A2 milk. And I remember I just kept averaging in up,
mm.
up, up, up.
But how do you manage to sell then? Because you've mentioned a few that
I'm good at selling for some
you've dogged on
reason.
yourself about the hypey stocks that you've made money on, but how is it that you knew to sell in it? Because in all of those cases that you mentioned, but just take A2 milk, I don't personally tend to do well off these hype stocks too well because I'm looking at my old records on A2 milk now, and it seems like I bought it for $2 and sold it for $2.90 or whatever, or $2.12 and 90. So I made a small profit, and then
You
I
didn't
went
hold
back.
till $12 like I did.
No, no, I did something worse, Danny. I then bought what must have been pretty much the entire peak at like $13, and then fortunately sold it at like 11.50 or something. But I made two small trades, I guess, neither of which made or lost a large amount of money, but the net result was a very small profit. I definitely didn't do well out of that. Like for me, I guess I personally only really make money out of these like buy and hold forever kind of things.
Yes.
And that's
Yeah.
why I
Yeah.
have this huge bias towards profitability, quality, trusting management, all that
Correct.
sort of stuff. Now, I'm not saying that you should always hold through hype. I clearly agree with what you're saying, which is like for most hype stocks, you got to sell them. But I
Yeah.
guess what I'm looking for is those stocks where they can get hyped up and maybe I
Yeah.
sell a little bit, but I mostly just keep
Correct.
it. I'll go back
Yeah.
down and it'll get like hyped
Yeah.
up again in the future. And I just
Mm.
ride these ups and downs without doing
Yeah.
too much, maybe just
Yeah.
selling a little bit when I feel like
Yeah.
it's hyped.
Yeah.
I mean, that's how I manage it. But look, it's always a challenge, and it's like these are
It
the
is.
psychological parts of
Yeah.
investing because I need to guard against that hype as well because I
Yeah.
feel like I get my if I don't feel happy with with the price I've paid and confident with it, then that's when I'll do these sort of A2 milk patterns of trading where I like
Yes, I get stuck in the same thing, Claude. And I think it's important when I say, though they're my winners, trust the audience. I've had my fair share of clunkers, but I'm usually pretty good when I see the share price kind of starting to fall. I usually just make a decision to cut my losses and get out. I mean, I'm by no means perfect, but I have held a lot of stocks for a
I
long
think we're
time.
attracted to a lot of the same, like, sort of this idea of
Yes.
going for mega trends where you've got this demand. Because the thing about a secular mega trend, whether it be at that time, the A2 milk thing, the demand for the
Mm,
A2 milk for
it
the
was huge.
Australian infant
Mm,
formula in China was
mm,
massive and growing
yeah.
because Chinese controls on the quality of the infant formula had
Mm,
failed,
mm.
and infants had got poisoned.
Poisoned.
And on top of that, I think culturally the message that breast milk is preferable hadn't really gotten through in
Yeah.
China at that stage. I don't know if it has now, but it was not to the same degree. It was like baby formula might be even a bit of a prestige thing there,
Yeah.
whereas and I definitely also baby formula special because it's for your little baby, so you don't mind spending a bit extra. So that was an interesting trend. I wouldn't call it a mega trend, but it was definitely a trend.
Again, I think it's hard. This isn't not meant to be easy. When it gets really easy, like it was in 2021, you know that you should have warning bells going off in your head. I described to in an interview at that point. It's like shooting fish in a barrel. It was so easy. You could buy anything and it went up, right? It was that classic bull market. Investing is challenging, and the hardest thing is to hold on to companies that you still believe in, but they can do nothing for 6 months. But it doesn't mean that you jump off the bandwagon. Like at the moment, everybody's buying resource stocks. They're punting little specky gold, silver, all these companies, and ditching good quality Australian quality companies because
Mm.
apparently we've got a bubble. And that's the case in point. Just be careful that you don't suddenly panic because the rest of the market is against your basket of stocks for a point in
Yeah,
time.
and I'm going to need to hear that at another time when my stocks aren't mostly flying, please, because right now it's all coming up, Claude. So, please call me
You're
up
in
and
the
tell me
small caps.
when Energy One's back down to like $9. Just please give me a call then and tell me not to freak out, because right now I like open the account and I'm like, oh yes, done it again. Keep going, mate. But like
Oh, no, no, no.
I
Put
know
that
how
hubris
quickly.
back in the box.
Yeah, exactly. I know how, like, I don't, unfortunately, that seems to be one of the lessons that the universe keeps teaching me is like pride comes before the fall. And like now, like, completely even not to do with investing. It's like always the thing in my life. If I get overconfident in something, I back myself too much. Oh, whoops, you make a mistake.
Yeah.
So I do think a bit of self doubt is helpful there. But in one stock that I wanted to ask you about, get your quick take on it, or at least your quick take on my psychological situation, is Audinate, because this is a stock that I feel like I first of all I feel like it's the kind of company you might be interested in. So for anyone who doesn't know what Audinate is, first of all, we've been covering it for years on A Rich Life, almost all of which is free coverage. So if you just Google A Rich Life and Audinate, you can find that. But essentially, the key thing about Audinate is they have this sound over fiber optic protocol. So what this allows is for audio systems, like say for example, an audio system in a huge building that might be connected to a fire system, or a stadium that might even have need for to make announcements in different areas at different times depending on what's going on. This Dante, it's called, the protocol that allows audio signals to travel over fiber optics rather than wires, is a massive leap forward, and was a massive leap forward over copper wires for a few reasons. One is copper wires are actually more expensive. Two is the way, like a switch, that's what a switchboard is. Like, there used to be audio switchboards. People are plugging in, plugging out, these things, like complicated devices to
Mm,
control what audio system physically, like a physical network, the only way that they were connecting things was just a physical switch. Is it physically connected? Whereas
mm,
with fiber optics, it can just maintain physical connection at all times, but just turn on and off whether you're sending the signal to a different area. So it's a technological advance there, right? So
mhm.
that was the mega trend that I've been interested in with Audinate. But, I feel like this is one that I've not traded well, and I have just psychologically, I don't think I've been on top of this. It's just gotten the better of me. Now, the sad thing is, like I initially first recommended this when I was at Motley Fool Hidden Gems at under $3 and subsequently bought my first shares at around that price. And then, if I look at my share site over the course of time, I'm sitting on a -4% return on this stock. So, and it went
Mm,
to $20 after I
mm.
bought it initially. So in that journey,
Post-COVID.
it wasn't just that though. Like even if I had just bought it in 2018 and hold it the whole time,
Mm,
I
mm,
would still right now today, it's on $6.15. So I'd still be doing way better than I actually did. What's happened is I've variously some succumbed to despair and thinking, oh, this I don't trust this company. And then other times I've given into FOMO. Where I sort of landed in the end is that I'm just going to buy a small holding and not trade it, and because I don't really trust myself and hold on. I'm going to put
mm,
up for the video an image now of the Audinate's gross profit, which is, I guess, the only real quantitative argument that I would make that things might be getting better. Because what that gross profit graph shows by half is that we had this situation where Audinate was doing well and growing all the way through to the second half of FY 2024. And then it had just this huge drop off in the first half of 2025, and now it's gained up a bit from there. Now, I definitely think that that huge drop off has made it lose the favor of the market, and understandably so, quite frankly, because a bunch of things happened, like the CFO sold his shares and quit and stuff like that before the share price faded. And so, and the CEO sold shares as well, and their remuneration was sort of measured with regard to, like, fortunately, like the good year, not the bad year. So I think there's not much love for the stock now amongst the market, and also what happened
mm,
is sociologically is all of the people like me or someone else who went on
mm,
Ausbiz or any other show and was like, yeah, I like
mm.
Audinate, I own shares, blah blah blah. It's
Yeah,
15
it's a
bucks,
huge disappointment,
and
yeah.
then it goes
Mm.
down and you lose 60. You're down 60%, 75%, or
And
whatever
it's
it is.
very hard to recover from that.
Yeah, exactly. So that's what they're going through now, essentially.
Mm,
And I'm
mm,
just holding on to it because I essentially want the I don't want any listeners to think that the fact that I'm disclosing a holding into Audinate makes me think that it's a layup. I have a right at the moment we're recording now, it's a less than 1% position in Audinate. So it's just one that I've really struggled with. So, like, what do you think about Audinate? And I guess even if you don't have any thoughts about Audinate, what do you think about my position? Should I just walk away now that I've messed it up so many times? Should I try and redeem myself? What should I do?
I think it's easy to collect too many holdings like Audinate. They shoulda, coulda, woulda done it differently, and you have to be careful that you don't get too many in the portfolio because they cloud your judgment. As
Hmm.
you said, there's an emotional scarring there, and it's always sitting there looking at you going, "Look at me. I've
Yeah.
messed up. I haven't done too well." That's
Yeah.
the first thing.
No, I've spent so much time thinking about writing about analyzing this stock, and it's just amazing, and it's gone up, and just
Honestly, sometimes there's 2 points. Dead people who have a share portfolio do better than people like us who look at
yeah,
it too often and do too much. That's point 1.
yeah,
We met some really interesting ladies at the Livewire conference. Their portfolios, I'm not even gonna tell you how ginormous they were. It's not my business to do that. They literally had bought shares 30 years ago and done nothing.
yeah,
And they go, "Oh, it's not much." And you kind of go, "Oh, sorry," while I choke over my drink. And that's a classic point of when you get a good one and you just leave it. Now, I guess the point is you don't know what the good ones are going to be. And that's why you have diversification.
mm,
But honestly, your good ones will outshine your long ones if you're happy, if you sit and you hold them. And I'm guilty as charged as like you, Claude. There have been so many things that I just should have sat on them
mm,
rather than fiddling around with them. But when you have one that has gone down that much, it's really tricky. I mean, I don't know. I tend to bin those things and just move on because psychologically I'm damaged. As to Audinate, clearly they had some demand problems there.
mm.
I'm not sure it's a secular trend I'd necessarily jump on, but that's just kind of your thing?
Yeah, no, I think that that's a huge part of it is because if it wasn't just me, obviously buying Audinate on this like, yeah, it's just going to take over, go go go
Yeah,
go, and
yeah.
it's so easy to forget that the reality is for someone like me that's used to investing in a software company where like they don't have the fluctuations in revenue as much. Like
No.
the guy that was using the software last year is probably still using it this year. Whereas for Audinate, you know, it's the unit sales and the that are made and manufactures. It can go up and
It's more
down much more
cyclical.
easily. Yeah, exactly. So it's like I feel like I broke one of my general rules for investing, which is like
Yeah.
I want recurring revenue. And by the
Don't go
way,
cyclical. Cyclical's really hard. People that do cyclical usually do it really well. I'm the worst in the world. If I go and buy a cyclical resource stock, I can swear to you the next day the whole trend goes down. I mean, I just don't buy them. I'm useless,
yeah,
absolutely useless. It's not my remit. And I think that's another point to take away. Stick with what you're good at and and you're comfortable with. Don't buy businesses that you're not 100% across understanding what they're getting at. And if you're no good, some people are no good buying technology stocks or growth stocks, so they stick, with the idly piddly miners or whatever they do. That's their pond they play in. We don't all have to all be the same.
yeah, I do. I think that's a great point to end on as well. Is I think we should all try to invest in a way that is a style that suits our personality and
Yeah,
our
yeah.
natural strengths. Anyway, that's great advice. Everybody, small cap investors out there, you know, there's a style for you. So like part of the journey, I guess, is to find what style you can do well and consistently, and then measure if it works. And if it does work, then that's something you can move forward
Mm.
with the best chance of success, essentially. So, that leads us to the sort of final conclusion of the episode. I will do the like disclaimer thing again. Of course, the information that we spoke about today is not supposed to be any kind of product advice. Certainly isn't financial advice. The AFSL details for anything considered advice under the law will be in the notes. And also, we could have made mistakes. So either Danny or I could have said a number wrong or forgotten something, said the wrong name. Like it happens. This is not supposed to be like, you know, a perfect investment report. This is us discussing our views on some small cap stocks that, quite frankly, I think are amongst the most interesting. You know, I come out of this conversation. Yes, the Siteminder share prices have gone up lately, and yes, the Audinate share price has gone down lately, but I just have this sinking feeling I might be holding the wrong one of those. Um, but you know, I guess why not both? So with that, I think I'd like to leave it by saying, hey, if you are a listener of the ASX Small Cap Wrap, you know, a Rich Life and FN Arena, we great, you know, tools that can be used side by side. I think that Rudy and Danny are both great, and they will definitely do the best they can by their subscribers. So you should absolutely, which I'll put in the show notes, but there's a promo code. Thank you for sharing that with us, Danny, which is, I think, promo 25. When you sign
Mhm.
up for a FN Arena free trial, which I'll put in the show notes, you can put in that code. You get a bit extra longer to explore, which I think is a great option. And on top of that, go and check out Danny's article on Siteminder. That's going to give you a much better, a very succinct and good snapshot of what the company, and also pulling in views from different brokers as well. And then also in the coming days, we'll have some coverage of the Siteminder results on our website as well, which will be free to read in due course. So you guys can keep an eye out for that if you're interested in the stock. So thank you so much for joining us, Danny. Really appreciate your time.
My pleasure, Claude. Great chat. Thank you for having me.
Cool. Thanks a lot. And thanks everyone for listening. It means a lot to me that you guys and girls are all making this new YouTube channel a success. It's super important for us to start doing this kind of thing now that internet traffic is declining, thanks to the Chat GPT and the like. So I really appreciate that. And yeah, keep watching, like, subscribe, comment. It all makes the biggest difference to the algo lords, which we must obey. So thank you, everyone, and have a great, day, night, evening, whatever it is.